Let me be completely honest with you. Most traders will never become consistent, not because they lack intelligence, not because they lack access to information, but because they never build a complete structure. They collect strategies, watch videos, try indicators, switch systems, but they never build a professional blueprint. In this final episode, I'm going to show you what a blueprint looks like, the complete framework that transforms trading from chaos into structured progression. Hi everyone, welcome back to Wednesday Moves. This is episode 30, the final episode of this 30-part professional trading series. If you have followed this journey from episode 1, you now understand execution, structure, psychology, portfolio management, and performance optimization. Today, we integrate everything into one unified professional model. The five pillars of professional trading. True consistency is not built from one skill, it is built from five aligned pillars: strategy, risk management, psychology, adaptability, and performance engineering. Pillar 1: Strategy Mastery. A professional trader operates with a clarity defined edge that has been backtested, forward tested, and documented. Execution becomes mechanical rather than emotional. Precision replaces impulse. The next pillar, risk architecture. Capital protection is prioritized over profit maximization. Position sizing is calculated and not guessed. Drawdown thresholds are predefined. Scaling is controlled rather than reactive. Pillar 3 is psychological stability. Emotional control is not a motivational concept, it is a structured discipline supported by rules and risk management. Professionals reduce emotional volatility by reducing financial volatility. The next pillar is market adaptability. Markets evolve. Regions shift between trending, ranging, volatile, and compressed environments. A professional adjusts exposure rather than forcing trades. The last pillar is performance optimization. Equity curve analysis, risk adjusted metrics, and statistical evaluation transform trading from activity into measurable business performance. Optimization is continuous refinement, not constant strategy switching. From trader to operator. At some point, a trader stops thinking in terms of individual trades and begins thinking in terms of systems. You become an operator managing capital, structure, and probability rather than chasing outcomes. This shift changes everything. Long term wealth path. Sustainable trading growth is a result of controlled compounding over years, not weeks. Capital is layered gradually, risk remains proportional to confidence. Growth is steady rather than explosive. Common mistakes to avoid: over leveraging after wins, strategy hopping during drawdowns, emotional revenge trading after losses. This behavior destroys structure. Your 12 months professional plan. If you're serious, your progression might look like this. First 3 to 4 months, refine and document your age. Next 3 to 4 months, stabilize execution and reduce variance. And final phase, focus on structured compounding and performance optimization. Consistency emerges gradually and not instantly. The reality of mastery. Mastery in trading feels boring. It feels slow. It feels discipline. But behind that discipline is freedom, financial and psychological. Here's a final message: discipline builds freedom, structure builds sustainability, patience builds wealth. If you implement even 50% of what we covered in these 30 episodes, your trading trajectory will change permanently. If this series has helped you, subscribe and stay part of the Wednesday Moves community. Trading is not about chasing excitement, it is about building systems that protect your future. Thank you for being part of this journey. This was episode 30, the complete professional trader blueprint.